At BMO ETFs, all our investment tickers start with Z. That's right, Z, not Z. From ZSP to ZEB, we build solutions for the Canadian investor. So next time you invest, consider a Z instead.
Hey everybody, it's Larry Berman here. I'm recording this about 2 hours before the market close on Friday because I have a wedding to go to tonight. So wasn't able to do it typically after the market close. Email crossed my desk this morning that I thought would be a great subject matter for here as we sit at the end of May. So let's have a look at the meat of the email and see what the message is. So McFadden on Markets is part of Motley Fool's Asset Management. Basically asked the question, here's why we should not sell in May and go away. And that could be a bad idea this time around. And she goes on to say that, timing the markets are really difficult, which is interesting because I think Motley Fool does that. But anyways, and when you look at, the hypothetical portfolio versus, a trading model of in and out and so forth. And pretty shows all these examples tend to show that timing markets are really difficult. And as someone who's now coming on 40 years of trying to do this, I can vouch for that. It clearly is. But what I thought we'd do this week is take a look at the seasonal factors that are in play right now and where this all came from. For those of you over the years who have followed our Pro Eyes indicator, you'll know that we have two types of seasonal patterns we look at. One is all years combined of the 4-year presidential cycle. In other words, we don't highlight that this is the first year. We just look at all years combined in terms of the seasonality. And when we look at where things are now, we basically have passed some of the worst market type returns. And for the next few months, they tend to go up. So here we are, end of June. We're at a level right around here where it's kind of attractive in terms of forward-based returns for the next few months. This blue line here is the average 1 month forward return. So when the green is at the bottom, best returns for the next month. When we're up here at the top, worst returns for the next month. So you can basically see that as you get into the October period, you've got that bad seasonality in September into October that you end up getting all years combined. But when you look at the presidential cycle, the first year of a presidential term, so here we are, first year of presidential term, and as we get into May, where we are today, we see that the risk levels are actually pretty elevated here. And if we look at the back half of the year in particular, and August, September, October, really right through year end, that the back half of the year tends to be really unattractive from a forward returns perspective. So that's what the seasonals are in the first part of the presidential cycle. And so, should you listen to Motley Fool and always stay fully invested? And the answer is it depends on who you are as an individual investor. Anyways, let's have a look at what we learned from the chart of the S&P 500 this week. And there's a couple interesting things to note. So on a futures basis, what we saw this week when we got the court ruling that the Trump tariffs would be rolled back is a gap higher following NVIDIA's earnings. And we made a marginal new high relative to the previous week's high and then failed back into the range. So on the futures basis, you've got what looks like right now is a failed breakout. But this pattern of a double top failed breakout isn't complete until this low is broken. So let's have a look at it on a slightly different perspective on a candlestick chart basis. And so here we've zoomed out here a bit. There's the low that we saw in a cash market. On the cash market side, we didn't make a higher high. So you got a little bit of a weaker pattern developing, selling coming in a little bit early. An hour ago, the S&P was at the lows of the day. It's bouncing back now. We've probably got some quarter end, window dressing here that might keep the market slightly firmed. The 0-day to expiry options have some pinning around the 5,900 and 5,850 level. Again, if you look at the low of the day today, 58.43. So you saw buyers step in below 58.50, sellers above 5,900. Not sure where it's going to go out here, but now we're grinding towards that 5,900, looking for those same hedging selling to materialize. So we'll see how that plays out. Again, I'm taping this right now. It's 2:22 on Friday afternoon. You can see that here in the charts. So if we take out this low that we made a week ago, and it just happens to be we held the 200-day average, then this thing is almost surely going to retrace back into the box where we have support around 5,400 up to 5,500. So that's where I think we're going at some point in June before this thing could potentially go higher. Again, we're a social media post away from, dramatic moves in either direction. The uncertainty factor this week is even higher because people are just asking the question. I had lunch with some clients today, and everyone was saying, well, what do you think? Well, is he going to be able to do this or not? And that's the debate for the next couple of weeks here, as I guess the appellate court ruled that the tariffs are still in place until they're not. More to come on that front, to be sure. So, markets are going to remain volatile, and I think the risk, at least in the short run, is to the downside here. We did get, on the economic front, an uptick in weekly claims, even a higher uptick in continuing claims, and to me, it's the labor market that is starting to soften here just a little bit. Nothing we have to worry about yet, but I think the market, and the bond market in particular, caught a bit of a bid on that softer employment number. So bond market a little bit supportive right now. We had a good 7-year auction this week, largely because of that probably softer employment statistic, where people are now starting to think of bonds maybe as pretty attractive with the 30-year above 5%. Anyways, that's all we have this week. Have a great weekend, everyone.